Hey guys, welcome back. Listen, everyone is staring at NVIDIA, waiting for that next 10% move, that next leg up in the trade. But meanwhile, the real money, the whale money, they just moved the goalposts in a different direction. If you want evidence, take a look at today's tape. Micron is hitting $500 a share. AMD is knocking on the door of $350, and Intel, the company that the street has left for dead for the last 3 years, just closed today's session at $83 a share. Why are we seeing all these signals in the market? I think it's pretty clear. The AI trade is changing. It is evolving right in front of our eyes. We are now finished with the compute phase. We have entered the physical infrastructure era. The bottleneck isn't math anymore. The bottleneck now is the plumbing underneath. Today, I'm going to show you why the CPU is officially being re-rated and why the memory kings, the three of the Fab Four that are sharing their earnings next week, why they're going to shock the bears. And finally, I'm going to show you a single $834 million trade that went through at today's closing bell that proves the smart money is already positioned for Monday morning. Let's dive in and talk about all those stories. But if you haven't done it already, make sure you hit like and subscribe to the channel. You guys know I have a goal of 7,000 subscribers by the end of this month. We're at 6,600 now. We have 6 days left to get 400 more subscribers. If you haven't done it yet, if you like this channel, if you find value in the content, smash that subscribe button, be part of the community, and let's hit this goal of 7,000 subscribers by the end of the month. Guys, let's first start off and talk about Intel today. Clearly one of the biggest movers that we saw in the market overall. I'm going to pull it up and just show you the results. You can see 24% growth on the day, $16 gain for the stock. It closed at $82.54. Couple things I want to highlight as well is if you look to the right, a new 52-week range. The stock actually crossed $85 today. But more importantly, look over here in the after hours. We didn't give any of it back. It actually gained 18 cents more in the after hours. To me, this is a huge bullish sign. There's not a sell the rip news in the after hours. We're seeing institutions and whales that are very comfortable with their positions heading into the weekend. I think we're going to continue to see support on Monday when the opening bell rings. And for a couple reasons. One, we know this stock continues to be undervalued. Look at the average price target for analysts. It's $55 still. This stock has not been re-rated yet. We're going to see that in the early part of next week. I think you're going to see banks that are sitting with valuations or price targets around $40, $45 a share. They're going to be embarrassed based on what the performance has been like in the market today. They're going to chase that price target up to the $85 based on the earnings, based on everything else we see in the market. Because the reality, guys, they're valuing and rating this company as a legacy PC company when in fact they should be rated as an AI foundry, a leader in the AI foundry space. All of what we saw in the market today was a validation of their earnings. We knew they hit about $14 billion in the quarter, up 7%. But the bigger piece of that was the fact that their AI and data center growth, I think it was at 22% overall for the quarter. Massive improvement, huge sign overall. We saw that. But it's more than just that. Because here's the mystery. The CPU is suddenly the focus of all the news lines again. The CPU is growing in such importance right now because we're shifting. The market is shifting from training to inference. And the CPU right now, it's the head node again. Because when you make that shift, the CPU is the most important player. It is the traffic controller. It is the conductor of the orchestra overall. The CPU can't feed the data fast enough. If it can't feed the data fast enough, your GPU just sits there taking up space. So I think we see a number of articles right now talking about the number of CPUs that you will need as you move from training in large language models to agentic AI. And when you just move to inference overall, it puts a huge focus back on the CPU. And that's why we're seeing moves with Intel and AMD like we are in the market. But the real alpha from that earnings print that I think that has the bears terrified overall was the foundry story for Intel. We are seeing that their 18A is beating expectations. They have competitive yields already right now, earlier than they expected. But there's also a bigger story. There's the PowerVia. Let me pull up an article here to show you exactly what I'm talking about, because this is a piece that is not only, here, let me change it, that is not only a positive story for Intel, but it actually is a differentiating story for them. It puts them at a competitive advantage versus TSMC. Based on this article, you can see that they are hitting their 18A hits high volume manufacturing. It's the first US made 2 NAND chip, and it's beating TSMC based on its architecture. It's all down here around this dual innovation. Essentially, the PowerVia that I've highlighted, it moves the power delivery to the back of the chip, freeing up the front side for signal routing. Together, they've delivered 15 to 25% improvements over into the Intel 3 chip. But why it's differentiated from TSMC is you can see that moving that into the back, you're reducing voltage loss from package to transistor by 30% and freeing up 5 to 10% more front side space for logic routing. TSMC's N2 doesn't do this. They have GAA transistors, but no backside power delivery. So this gives Intel's a power per watt advantage over TSMC's N2. And that's critically important for laptops and edge devices. So guys, I think as Intel is finding its way, it's building up its foundry business. We know they're a big beneficiary from the CHIPS Act. They're a big beneficiary from the administration. In fact, the US government is the biggest owner in Intel right now, I think with 10% overall the business. So they are a big story, are a big part of building out the sovereignty here in the US, building out the American foundry again. It's great to see their revenue. It's great to see them put discipline again and start moving in the right direction. And it's a really positive story what we just showed with some of the differentiation they have against TSMC's N2. I think that's why you'll see the price target get moved next week. It'll be validating all the moves that we saw in the market today. And I think this price that we're seeing is something that will stick for a bit more. I do think we're going to see a little more movement from Intel. We may see a pullback, but when you see the price targets adjust into the range of $80 to $100 overall, I think you're going to see Intel start to move again into that range also. So big part of today's story, but it wasn't just the CPU alone. Another big factor today was Micron. Micron was a major mover today because we know that the brain is only half the story. To truly run agentic AI, you need a different kind of muscle. You need that massive memory muscle that Micron can provide. And Micron hitting 500 today wasn't a fluke. It's the HBM4. We know that HBM4, it's way more than just traditional RAM. It's a 16-layer vertical stack. It's the high-speed elevator for data. Without it, the AI agents that we're all building, they won't be able to think in real time. So let's look at what Micron did today on the market because it was a huge bullish sign for the stock. And you could see right out of the gates, Micron, they had a gap up and go. We saw them building momentum in the pre-market. And as soon as that morning bell hit, you saw this stock jump. Look at that. It was in the first 5 minutes, it jumped $15 from where it closed yesterday, just over 3%. But guys, in the first 5 minutes, the stock moved over 500, got up to about $507 a share. And then we saw a little bit of algorithmic selling, a little give back for sure. But then look at the support that followed again. Got up to a high of just under 507 a share. It closed this 5-minute window at about 505 a share. We saw a little bit come back down to the 500 level and some sideways consolidation for the rest of the day. But to me, this is a really positive sign. There's a couple things I want to call out. One, if you look at the RSI, it's perfectly neutral right now. It's hovering around just a low 50s. It's not overbought. It's not oversold. It is ready to move again next week when the market's open. So I think we have found a new floor for Micron. We know for a while we were moving in this 450 range, and then we stepped up to the 470, 480 range, and now we have stepped up again, and we're holding in this mid 490s. The stock is poised. It is ready to coil. It's ready to jump again, and I think we're going to see that with all of the earnings next week. Next week is a massive week. We have 5 hyperscalers that'll be sharing their earnings. They're going to show their commitment to building out the data centers, their commitment to building out all the infrastructure, which will be a bullish sign for the memory players. And then you have 3 of the 4 memory titans sharing their earnings. You have Seagate, Western Digital, and SanDisk all reporting next week. They're all going to show massive pricing power, massive revenue jumps. They're going to talk about capacity being sold out. They're going to talk about long-term customer arrangements. And again, that's going to be a bullish sign for the sector. It's going to move those stocks, and it's going to move Micron over 500. I think we're going to see 500 get smashed through, and we're going to set a new floor. It could be 500. It could be a little higher as well. Drop the comments below. What do you think the stock's going to do next week overall? But guys, as we move into this agentic phase and we move to the edge phase, the need for memory is just going to be exponentially higher than we see today. So there is noise in the market around this glut of supply. We see SK Hynix in their earnings mentioning they're going to build out more capacity. Samsung's going to build out more capacity. So is Micron. It has the bears worried that we're going to see a crash when we get to about late 2027. But my mind frame, I think they're using an old playbook. They're just looking at it through the lens of the data centers today. They're not looking at it through the lens of where we're going with edge, where we're going with the agentic AI players, because that demand for memory is going to be exponentially higher. And I think as soon as that supply hits the market, that those three companies are going to produce and put out on the market, it'll be immediately sucked up, and then we'll still have a need for more memory. And remember, we have three earnings next week. So SanDisk is expected to hit somewhere between 4.5, 4.6 billion, but some bullish analysts say we could see it go over 5 billion in revenue for the quarter. If they do that, that would be close to like a 200% increase year over year, a massive move. We see Western Digital, they're expected to be in the range, I think, of 3.2 billion, but they're expected to beat expectations by up almost 200 million. And then Seagate is expected to be around 2.94 billion, but they have been the alpha group so far. And I would not be surprised if we see Seagate post more than 3.1 billion in revenues this quarter. Guys, these are all going to be massive numbers. It's going to be a huge sign for the memory sector. It's going to move Micron, in my opinion, over the 500. And here's the biggest moment, I would say, for us in this video. If there's one thing you can take away is to understand this. If you look at AMD today, you're probably wondering, why is it hitting an all-time high of 348? And just let me show you that performance, because I have it pulled up. But you can see AMD had a massive performance today, up over $40 a share, closed at just under 348, 14% growth. At one point, it got up to 352 a share today. And if you look in the after hours, it's holding on as well. Put up another $1 in the after hours today. So closed up around just about 349. So again, strong bullish sign that we're not giving any of it back as we head into the weekend. The whales, the institutional investors, are comfortable with this position overall. But the piece, guys, that I want you to take away from this story is, why did they move the way they did? I think it's the one piece is, if we think about the standard chatbots that we have all used, whether that's been ChatGPT, Gemini, or whichever one you use, remember that the GPU does about 90% of the work of a standard chatbot. But as we shift into this agentic workflow, where AI has to call on API, check your calendars, browse the web, the CPU to GPU utilization ratio, that jumps from 20% to nearly 50%. And AMD has a real edge here because their EPYC processors are winning the orchestration war. They have built a chiplet architecture that talks to GPUs faster than anyone else. And NVIDIA isn't stupid. They see the CPU taking back the trade. That's why Jensen dropped the Vera CPU. It's a defensive strike. NVIDIA is trying to own the plumbing so they don't lose the orchestration revenue to AMD and Intel. We are moving from a chip market to a systems market. And I promised you I would show you some of the tape. I always like to look at the tape because I said headlines can lie to us, but the tape never lies overall. And here's the piece that I want to show you with regards just to Intel and the massive sign that we saw going into the weekend. So let me pull that up. But you can see on your screen right in the middle, right at the closing cross here, we had an $835 million trade, just over 10 million shares of Intel cross at the 82.54 level. Guys, this was a massive institutional support going in. This type of closing cross, when you see a single block of 10 million shares executed at that price at 82.54, that is a conviction in 60 seconds. And remember, we saw a spike in call volume today for Intel too. They had 182 million shares. But the takeaway is clear. The whales are gearing up. They're front running for the analyst upgrades that we are almost certainly going to see with Intel on Monday morning. And if we look at Micron, it's a similar story overall. The biggest takeaway here, I would say, for Micron is if you look at the put call ratios of 0.53, the smart money is buying the 550 calls. They're not shorting the top right now. They're buying the breakout. It's another support, just a huge sign for Micron that this is the beginning. We're going to see more growth for both Intel and Micron. The whales are moving in. They're putting positions behind these stocks. They're not expecting them to pull back. They're putting support there. So the AI trade, as we've said many times, it isn't a bubble, but it is a migration. We've migrated from the cloud to the GPU, and now we're migrating from the chip to the system. Keep your eyes on the $80 level for Intel and the $500 level for Micron next week. If we hold those levels, the structural re-rating that we saw today will be confirmed for sure. Guys, I hope you had a great night. I hope you enjoyed this video. Drop your comments below. Let me know your thoughts, and I'll see you in the next one. Take care.